Ni hao and welcome back. If you were watching the markets in Shanghai this December, you saw a massive surge in the old economy, miners, insurers, and travel giants. While the rest of the world was winding down for the holidays, Chinese stocks were heating up. We saw billion-dollar acquisitions, massive earnings upgrades, and state-owned giants increasing their stakes. In this video, we are counting down the top 10 best-performing stocks on the Shanghai Composite for December 2025. These are the companies that ended the year with a bang. Let's see who made the list. Number 10, China Life Insurance, plus 5%. Kicking off our countdown at number 10 is China Life Insurance, up 5%. It was a quiet but solid month for the insurance giant. On December 30th, the company held an extraordinary general meeting to pass key resolutions and elect new employee directors. While it wasn't the flashiest news, the stock benefited from the massive rally in the broader financial sector. When companies like Ping An and CPIC are flying, China Life gets pulled up right alongside them. Number 9, PetroChina, plus 7%. At number 9 is the energy titan PetroChina, climbing 7%. Two big headlines drove this stock. First, they announced a major new oil discovery in the Tarim Basin, reminding everyone of their exploration power. But the real mover came on December 29th, when the parent company, CNPC, announced it had increased its stake in the firm by 30 million shares. When the biggest shareholder says, "We want more," investors listen, and the stock popped. Number 8, Sinopec, plus 7%. Number 8 is the other oil giant, Sinopec, also up 7%. Sinopec had a rollercoaster month. They faced a scare with reports of an oil spill in the East China Sea. But on December 31st, shares actually rose 3% after they confirmed the spill was contained. More importantly, investors loved the cash returns. The company spent the month executing a buyback program, repurchasing hundreds of thousands of shares to support the price. Number 7, Shanghai Pudong Development Bank, plus 8%. At number 7, we have SPDB, up 8%. This was a classic valuation repair trade. Trading at a low price-to-earnings ratio, SPDB became a target for value hunters looking for bargains in the banking sector. With interest rate fears subsiding and the broader Shanghai index rallying, money rotated back into these steady, dividend-paying banks to capture the year-end yield. Number 6, Wanhua Chemical, plus 14%. Checking in at number 6 is Wanhua Chemical, surging 14%. Wanhua gave investors a nice Christmas present on December 25th by announcing the cancellation of a pledge for shares held by a major shareholder. In plain English, this removed a risk overhang from the stock. Combined with positive reception for their new sustainability initiatives presented earlier in the month, the market confidence in this chemical giant came roaring back. Number 5, Ping An Insurance, plus 16%. Breaking into the top 5 is Ping An Insurance, rocketing up 16%. Ping An was on fire. On December 22nd, the stock confirmed a major technical breakout, attracting a flood of traders. This followed a bullish note from Morgan Stanley earlier in the month, which added Ping An to its focus list and highlighted the company's growth potential. When the big analysts and the technical charts agree, you get a double-digit rally. Number 4, China Tourism Group Duty Free, plus 20%. At number 4 is the travel retail king, China Tourism Group, soaring 20%. On December 26th, the company officially confirmed a massive win. They were awarded the duty-free concession for Beijing Capital International Airport. This secures their dominance in China's most important travel hubs. UBS had already upgraded the stock to buy a week earlier, predicting a turnaround, and they were spot on. Number 3, CPIC, China Pacific Insurance, plus 21%. Taking the bronze medal at number 3 is CPIC, up 21%. The insurers stole the show this month. On December 16th, CPIC released a report showing that their life insurance premium income had risen by 9.4% for the year. In a tough economy, growing your core business by nearly 10% is huge. Investors saw this as proof that the consumer recovery is real, and they piled into the stock. Number 2. Zijin Mining, plus a 21%. Our runner-up at number 2 is the gold and copper giant, Zijin Mining, also up 21%. Gold prices were soaring in December, and Zijin printed money. On December 31st, they released a forecast expecting their 2025 net profit to hit $1.5 billion, triple what they made the year before. They also announced they are ramping up gold output. It was the perfect mix of high commodity prices and massive production growth. Number 1, CMOC Group, plus 23%. And finally, the number 1 stock on the Shanghai Composite for December 2025 is CMOC Group, surging 23%. The mining craze hit its peak here. On December 15th, CMOC announced a bold move to acquire gold assets in Brazil for over $1 billion. Investors loved the aggression. By expanding their resource base in South America while copper and cobalt prices remained strong, CMOC positioned itself as the growth leader of the sector. The market rewarded that ambition with the top spot on our list. So there you have it. Insurers cashing in on premiums and miners digging up massive profits. December was a month where old school industries proved they can still deliver new school gains. Did you catch the rally in the gold miners? Or are you banking on the insurers like Ping An? Let us know in the comments below. And don't forget to like and subscribe for your monthly market updates. Thank you, and see you in the next one.